Are you a high wage earner paying too much in tax? Pretty good problem to have, I guess, right? My name's Kyle Knott, and I'm not your average finance guy. We talk about things that are a little bit off the wall here, but if you're a high wage earner, think about it. You're in that highest tax bracket, and it's sickening, right? You work so hard, you've tried your whole life, you've worked your whole career to get to a certain point. You're making all kinds of money, and the tax man, Uncle Sam, just rips in there and takes whatever he wants, doesn't even ask. Maybe you probably even make too much money to contribute to a Roth IRA. So what's your retirement plans available? You can only maybe do a qualified plan, and there are ways that you can do a backdoor Roth. But have you ever looked into the infinite banking concept? The infinite banking concept is very, very similar. In my eyes, it's way better. So think about a Roth IRA. You've paid the taxes on your money, and then you put it into a vehicle, a Roth IRA, where it grows tax-free. And then upon retirement, 59 and a half, you can take all that money out plus the gains tax-free because you've already paid taxes on it going in. The infinite banking concept is very similar concept. You kind of creating your own banking system. You already paid taxes on it. However, you've got this money, your seed money to start it, you've already paid the taxes on it. So as that grows, because of the way that the contract is structured, it grows and it compounds, it continuously compounds, and then you never actually take the money out, you just borrow against it. It's kind of like the equity in your house. If your house is worth $1 million and you owe 500,000 on it, you've got $500,000 of equity. You can go borrow against your house. They don't take your house away from you. You still live in your house, but it's the equity. So you're borrowing against it. And yeah, if you ever want to borrow more, you're gonna have to pay it back, but your house will likely go up in value. So maybe in 5 more years, your house is worth, I don't know, $2 million. And say you already took out $500,000 of equity. Well, now you've got another $1 million in equity. You never paid that 500,000 back. You could theoretically take more money out because your house is worth more, right? So it's kind of the same thing with the infinite banking concept. Is you can take you put money into it, you have this contract, you have this asset that's continually growing, a lot like real estate, but not like real estate, because this is guaranteed growth. It's guaranteed plus whatever dividends that they pay, which are not guaranteed, but there is a guaranteed floor, but they pay the dividends every year for like over 150 years. So you're going to get something. We just don't always know what the dividends will be. So there's always growth. It's always building. It's always getting bigger. And then you borrow against that. And then if you're in the highest tax bracket, look into some sort of business. Maybe you're into philanthropy. You can do things that will lower your tax burden and dramatically. So I know some of the doctors and lawyers that have worked their entire careers with all kinds of training, and they get in and now you're making all kinds of money, but Uncle Sam is taking all of it, and you've worked so hard for all this. It's hard. I understand to look into something else, but there are ways that you can go to shelter a lot of that money from your taxes. There are syndications out there that if you're a high wage earner, if you're a accredited investor, you can get into. Be careful. I've gotten in trouble in some of those, but where the market's at now, I think it's probably a pretty good time to get into some of these. There's a lot of multifamily assets that are in some trouble right now, so they're kind of on sale. But that's one thing that you could do if you don't really want to be buy and hold. If you don't want to buy a single family house or a fourplex and kind of be the buy and hold type of person. If you're a surgeon, you got enough going on with your not 9 to 5, with your day job, that you don't really have time to go and deal with a property manager or all that. I totally understand that. There are a lot of tax advantages with rental real estate, but you can also do it through a syndication model where there are people that will raise, they'll get a bunch of people together and they'll bring together $5 million, and then they'll buy a $20 million big multifamily complex, and they'll try to fix that up a little bit and make that work better and more efficiently. And then you've got the cash flow coming in with that. And they will usually do all kinds of bonus depreciation, cost segregation studies. It's a bigger conglomerate. It's a bigger machine. And that's more of a passive, like, here's some money, do your thing, and I'm going to sit back, send me a check every year. Hopefully you get a check every year or every month or whatever it is that they tell you to do. But just do your due diligence. There's pro formas out there. Just because here's what they lay out and say they're going to do isn't always what could happen. So really have someone look into that. I made a video a while back about do you need professional help, and maybe have a professional look over some of the documents and make sure that they're legit. So something like that. So with that, if you can't do a Roth, you can always do an infinite banking concept. From there, you can use that to seed other investments, maybe start other businesses, which will then really take advantage of the tax code and can drastically lower all of those taxes. Yeah, they're going to take it out of your check, but then at the end of the year, you file your tax return and you're going to get a big chunk of it back. So I know that's not how we want to do it. We never want to give Sam a tax-free loan, an interest-free loan. But sometimes that's the way you do it. When they rob you every paycheck, and it feels good at the end of the year to get some of that back by using the tax code that they've developed. So, all right, I hope this helps, and good luck, everybody.